It looks like Jamie Dimon is still firm on his comments for a recession.
It's bracing itself for a hurricane. And then you noted that could be a minor one or Superstorm Sandy. And then you later downgraded that threat to storm cloud. So what's your macro meteorology telling you right now?
Yeah, I actually did not downgrade it. I just simply use different phraseology that gets overtreated. So again, the big picture of America is resilient, unbelievable, etc. What we have today is a little bit of an anomaly. A very strong consumer, low unemployment. We're growing as a country. Still innovation. The consumer still has more money in their income, in their checking accounts than they had pre-COVID. Their home price has gone for 15 years. Asset price has gone for 15 years. It's pretty good. Even if we go into recession, they're going in with a very good balance sheet, not a bad one, and businesses are in good shape. That's the good part. The storm cloud part is still there, which is things, I'm not worried. When I see people always talking about they're worried about this and they're worried about that, I don't worry that much. You can get worried about just about anything you want. I think people do too much of that, and I agree with Warren Buffett about the resiliency of America. But there are two things out there which give me heightened concern. One is the fiscal spending and the quantitative tightening. We've never had quantitative tightening. And I do think that might bite at one point, and I'm not, don't about it. And the second is Ukraine. The humanitarian crisis in Ukraine is extraordinary. The impact on oil and gas and food and migration. It could expand. Its nuclear proliferation, its nuclear blackmail. This is serious stuff which we have not really faced since World War II. So I put that in the cautious category. Hopefully that'll all sort out and the world will be safe again. But I hope people learn the world's not that safe. It will never be that safe, and we have to be very, very careful how we do that. And so how that affects the economy is different. But they are out there. And and the consumer is spending their money down. So I don't know if we're going to have a soft landing, a medium landing, or a hard landing. I'm actually much more concerned about this geopolitical stuff, all things being equal.
And of course, you mentioned QT as well.
Yeah.
You've said previously at Investor Day that everyone should be prepared for rates as high as 7%.
Yeah.
And there's a narrative out there that June's softer than expected CPI print is indicative of, kind of this mission accomplished. We're all good. Inflation's under control.
Yeah.
Do you agree with that narrative?
No, I think people overlook at short-term data. All that, if you actually dig into the data, you probably wouldn't pay much credence to it. And so it goes up, it goes down. I think you got to look at a little bit more. And when I'm saying 7%, I'm not saying it's going to happen. I'm saying as a business person, there are reasons why it might happen, and you should be prepared for it. You never want to be in a position and say, I didn't expect oil to go to 120 or 30 or interest rates to go up 500 basis points, and therefore I'm bankrupt. We should all be prepared for those type of things, but there's been a sea change in capital flows around the world. Governments have to sell more debt than ever before. All governments, including the United States. Now, some say less than down deficits. They're not down from pre-COVID. Debt levels are very high. They're selling more debt. Interest rates have gone up. Central banks are selling. They were big buyers, and now they have to sell for QT. We've never had QT before. And then also this new economy of ours, the green economy, $4 trillion a year. IRA, CHIPS Act, militaries around the world, almost every country is beefing up its military a little bit. These things may be a sea change in what you're seeing about capital demand. And I think there's a good chance that you guys, in 6 months and 9 months, are going to be talking about crowding out. And so we'll find out. The 10-year bond just went to 410.
I personally agree with his comments. The rate hikes have not fully taken effect yet, but will soon, and we must be ready for it.